Good day, ladies and gentlemen. It's been a while since I've posted on this page. So, I currently have another TradingView account, and the TradingView account is exactly the same name, which is my name and surname, except the last numbers change. So, instead of it being a 10, it's now a 78, and the profile picture of that profile will be me. So, you'll see me on the face of that profile. This is just my second account. I'm not really on here, but today I thought I'll make a video on this trade I took, and I wanted to make a video on on this page as well, so that the people that are here and have been following me that don't know about my new page, you can go and follow that page, because in that page I basically I've been doing new things basically. So this is part of it, and I'm gonna share or most of it, or not most of it. I'll share this basic setup with you, because there are many more setups there on my other page that you can have a look at, and I'm gonna show you one of my favorite ways to enter into a market. And this is a very powerful entry, and also this is a high probable setup, and I will show you what you need to look for. And yeah, so this is what I have in front of me is the trade I took. I bought Nasdaq today, and I made it about $120. It's not much, but where I'm from, it's a lot. So we take it as it comes. So anyways, so let's just get into the trade. So this trade consists of a basic system, and there's a few things you need to do. You need to identify your higher time frame. So in this case, my higher time frame is my 1 hour, because as you can see, I have a 1 hour order block right here that price pulled into and then started to move away. And we are going to find out why price moved away, so that you can look for this type of confirmations on your chart as well. So what we want to do now is, since we have established our higher time frame, and okay, let's just go to the hour. So this is my high time frame, the hour, and as you can see, we've got a higher high up here, and then we've got a higher low down here, then we've got a higher high up here. So basically, we are very bearish on Nasdaq. As you can see, we are looking to probably balance into this area around here, but that's for another time. It's a video for another day. But as you can see, this is my 1 hour order block over here, and I use the body of the candles instead of the whole candle, so it's cleaner. So once I saw this order block right here, I marked it out, and I was waiting for price to retrace into this area right here. And then my initial target was this high up here, because we were creating bullish structure, and I was gonna buy until this, but then I saw price started to reverse in this area, and we will get to that. So we will get to why price reversed there. And yeah, basically, so you look for your higher time frame, you mark out your swing points, which is swing low and swing high. And what you will do is also grab your Fibonacci. So you want to take trades when price is in this area. So your retracement should be at least 50% of that range that which you just looked at. So the range was the two swing points we just looked at. So this is my swing low and swing high. This is my one. This makes my current trading range. So this is my trading range. And what you want to do after you identify your trading range on your higher time frame, you want to mark out your discount level. So your discount level is just an area where you can buy price at a discount. Not only that, is that you can also you can basically find the most, like the highest probable setups to normally play out in the discount level as well as your premium level. So you want to look for buys in this area, and in the premium area you want to look for sells. So once you mark out that area, let me just find like discount level. So once you mark the area out, inside of this area now, you want to mark out a higher time frame point of interest. So our higher time frame point of interest is our 1 hour order block, because my 1 hour is my higher time frame. So I'm just gonna mark out um, my current trading range so that you can see what we are looking at, what our trading range is. So this is my current trading range. This is what we're looking at. And what we basically did, we just placed our Fibonacci over this range, because you would have done the same thing over here. If you are a little bit confused, let me just help you. So a new high is formed when price breaks above the previous high, and a pullback will always be a retracement in the previous range. So the previous range will also be marked out as a high, swing high and a swing low. So you can see down here is my swing lows down here. So that's my swing low. So now once we have our swing low and swing high in place, we need to wait for price to retrace into that range. And once price retraces into that range into a certain area, we can now start looking for buys at on a lower time frame inside of this higher time frame point of interest right here, to take out this high, because we are following the bullish structure and trend. So what you do next is you just grab your Fibonacci and you place it over this range. So this is your new range, your previous trading range. And as you can see, price also tapped 50% with this blue wick over here, this candle. It's hard to see, but as you can see, I think I can just move this over to the side. So as you can see, we traced 61% of this range inside of this balance trading range, or this Bussy right here, buy side imbalance, sell side inefficiency, and then you could have looked for a buy inside of the area. So that's how you find a trading range. You mark out your swing points, wait for price to retrace inside, like the same thing over here. Um, so we've got also another range right here. But let's get on with the video, because I don't want to make it too long. So, but basically, you guys just need to like mark out your swing points, and then you can just mark it out as your trading range. But it has to be like a valid trading range. So, and a valid trading range is normally made out of three candles. So we want the middle candle to have the longest wick, or be the longest candle this between the two adjacent candles next to it. So same thing over here. This is the candle with where the wick is the longest between the two candles that's opposite. But anyways, so once you have identified your higher time frame, and you've identified your current trading range on that higher time frame, and you've also established bias and direction, and after you've done that, you place your Fibonacci over your range and you mark out your discount level, and then you also mark out a high time frame point of interest inside of your discount level. So once you have that marked out, you then move to a lower time frame. So I went to the 15 minute, and I saw price created this downtrend. But if it's a bit hard for you to see, we can just go to the 5 minute, and it should be a bit more better for you to see what I'm talking about. So as you can see, from our swing high, we had a reversal, and price started to create bearish price action as the pullback now. This is a 1 hour pullback, but on the 5 minute, it's giving us bearish price action. Price is printing out bearish price action in the form of creating lower lows and lower highs. As we can see, supply is in control. So once you see price create this bearish price action into your 1 hour higher time which is the 1 hour order block, which is your higher time from POI. So once price pulls into your 1 hour 1 hour or higher time from POI, you wanna look for a change in structure or a market structure shift. And as you can see, you want price to basically invalidate the structure now by instead of creating a because we have the lower low right here, instead of creating a lower high, price created a higher high. So when we created this higher high, we totally invalidated the structure right now. And there are a few ways you can enter in here that I can see, but we will just focus on the basics. So you see price at a market structure shift right here, and that means price created a higher high instead of a lower high, which invalidates this whole downtrend structure right here. So we had a market structure shift right there. So that means when we created this market structure shift, we have now a swing, we have swing points in place right now on this 15 minute. So on this 15 minute, we've got this swing low right here. And we've got a swing high up here. And that becomes our 15-minute current trading range. So inside of that range, you can also place a Fibonacci and mark out your discount level. But I normally just look for a point of interest inside of this range that I can target. So I went back to the 15 minute and I looked for something that I can enter off of. And then what I saw is this 15-minute order block right here. And that is where I entered, and I placed my stop loss below the order block. And as you can see, price basically just tapped the order block and then started to move away. And it moved away, and I got a good risk to reward ratio. So let me just mark out this 50-minute order block. As you can see, price came in and then pushed higher. And that's how you can get into the market. And that's one of the best ways you can get into the market, like one of the safest ways that you can take part in the market. And I would say over leverage, but don't take my advice when I'm talking about you guys making money. You guys can take my advice when I show you how to get into the market, but don't listen to what I'm saying. I just do what I do. In high probable setups, high quality setups, I always over leverage because I know there's a high chance of this trade playing out just like this trade. So the reason why this trade didn't push all the way to this swing point and actually take that liquidity right there is because we moved into a new concept which is called a balanced price range. So inside of a balanced price range, and what this is made of is simply just an inverse imbalance overlap with a imbalance. So it's an inverse imbalance overlap with an imbalance, which creates a balanced price range. And when you see this happening in a sell or buy situations, as you can see, this is a sell situation because price is below this area. There was a strong chance of price totally reversing as it did. Like as you can see, we are still falling and we will probably come back into this area to sell off again. But as you can see, that is why price completely reversed. We might also have had news coming out, but that is one of the reasons why price completely reversed, because we pulled into this balanced price range. And that's a new concept that you guys can find on my new page, and I talk more about it on that area, and I make more videos there as well. So let's recap quickly. So we from that previous, so we were trending higher on the 1 hour, and this is our higher time frame POI. So once we discovered that we were trending higher, we also then established that we have swing points in place. So this is my swing low, and this is my swing high. Oh no. So once we have our swing points in place and we know that we are trending higher and price needs to retrace in this trading range that we just validated by having a valid swing points in place, we then place our Fibonacci over our range, and we want to mark out our discount level. Our discount level is where we find the highest probable setups. So we want to mark out our discount level, which is 50% and below in this case. and the premium area will be 50% and higher for sales. So once we have our discount level in place, we then in on the same time frame, we want to mark out the higher time frame POI that's inside of this discount level. So I had a 1 hour order block. So once you have identified your 1 hour POI or high time frame POI, you okay, let's just go 1 hour order block. You wanna then, so once you have these things established on your high time frame, you wanna then pop to a lower time frame where you can observe price creating bearish price action, like we saw on the 5 minute and 15 minute. So you wanna see price trending lower like this. So you wanna see price doing this on that lower time frame. The reason you want to monitor price is on this lower time frame is because you're waiting for price to give you that shift in structure so you can catch the change of cycles in price, which is going from a downtrend cycle to an uptrend cycle. So let me just make this a different color. So you need to observe price on a lower time frame until you see price invalidating that trend on the lower time frame. So as you can see, we completely invalidate the structure right here by creating a high. Then we had the pullback. So my entry came off in the pullback, which was on the 15 minute, which was the 15-minute order block. And I didn't close. I had a TP up here, sorry, but I closed where I saw the balance price action because I knew price was going to reverse. There was a big chance of it reversing, so I closed there. But this is the basic setup. This is basically what you should be looking for on the lower time frame. Just a shift in structure after you've done all your things on the higher time frame. Then you pop down to a lower time frame just to observe price action. And once you see price invalidate or whichever price action that is being printed, whether you're buying or selling, price invalidates that and violates that trend, and you need to start looking at going in the opposite direction. So it was a 15-minute order block that I entered off. So that was my trade that I took, and hopefully this helps you guys understand the markets more better and how you can make use of a higher time frame and a lower time frame and just observing. Like the only thing you will see on the 1 hour right now is basically just this one move right here and then another move right here. That's all you'll see on the 1 hour, but on the lower time frame, this is what you will see. That's red is what you'll see. Same thing, it doesn't matter what your higher time frame is. If it's the weekly, if it's the daily, if it's the 4 hour, you will find a bias, find a current trading range, get your discount to premium level, get a lower time frame where you can see price trending lower, and then once price invalidates that trend, you get in on the retest, and that's a high chance of that price playing of that trade playing out. So yeah, I hope this helps, guys. See you in the next one.